So let's look on. First is that we are now at the tail end of the Q2 earnings season for the S&P 500. For those that are still new, S&P 500 here represents the top 500 companies in the US, and then they're all grouped together and listed inside here. So usually if you want to see the health of the US, you just look at the top 500 companies. If they're not doing that well, yeah, overall, then the US, it's believed not to be doing that well too, right? So one of the favorite websites that I'll go and check is FactSet. And according to FactSet, right, even though we have 79% companies reporting actual EPS, right, above estimates out of the 84% companies which have released its earnings so far, the S&P 500 is still reporting its largest year-over-year decline in earnings since Q3 2020. So that's something surprising, right, to many, because we have seen the US stock market actually rising. So based on what we have so far, the year-on-year earnings decline for the second quarter is -5.2%. Now, if it remains this way, because only so far there's 84% companies who reported, there are 16% left, right? 16% to go. And if this 5.2% is the actual decline, so let's say the balance 16% also shows the decline, this would then mark the largest year-over-year earnings decline reported by the index since Q3 2020, which was -5.7%. We are not that far away, to be frank, okay? And it also marks the third straight quarter, right, in which the index has reported year-over-year decrease in earnings. Now, the market has been rising based on the fact that companies have been giving earnings result above expectations. But if you remember, I've shared this information with you before. CEOs of these companies, these S&P 500 companies, are known to give lowball park figure earning estimates to analysts as to drop the estimates. And once results are out and real figures are way above the estimates, it will give the impression that the CEO is capable in handling the company, even during current situations. You know, these are testing economic times, right? So if they give low ballpark figures and it come up much better, it looks, yeah, I said, I'm doing a good job. Okay, you see, I'm really beating estimates. It's all about beating estimates at the end of the day, what they want to show. Okay, now this strategy has been highlighted in the past by media. I've brought it up also. Now, they cannot hide one thing. The true fact is high interest rates do affect bottom line profits, whether you like it or not. And we are seeing this happening now, right? So now, during the upcoming week, 34 S&P 500 companies, including one from Dow 30 component. Dow 30, that means now this not only is top 500, it is the top 30 in the US. Is scheduled to report results for the second quarter, right? So if you look into this overall, right, now from the earnings result of the companies in the S&P 500 so far, S&P 500 is showing a decrease in earnings growth year over year. You see, look at this particular over here. You see there's decrease in growth year over year, right? But an increase in revenue growth. Its earnings growth dropped, but revenue has increased, okay, but not much. Has increased, but not much. So far, healthcare, materials, energy has shown year-over-year earnings growth decline for Q2 2023, and infotech, utilities, materials, and energy has shown year-over-year revenue growth declines for Q2 2023. You have seen right inside this chart here. All of this data comes from the FactSet. So as a conclusion, the remainder of the 16% of companies would be reporting, and if results remain negative or even worse, then we might have that -5.2 of what we have right now even drop further. But if it maintains, is at -5.2, is also not a good sign for the US economy going forward, because this is like 3 consecutive quarters of drop already. Now, so far, we have seen research done by Statista research department revealed that by July 2024, it's projected that there's a probability of a 66.01% chance that the US will fall into another economic recession. That's by Statista. Now, this, however, is a decrease from projection of the preceding month where the probability was 67.31. Now, this is still above that 50% mark, and I think everybody, you know, they are seeing signs like this. And this is one of the reasons also I looked at the interest rates. I've already mentioned, you know, just go back to simple logic. High interest rates environment, it's not going to be easy. You know, that's why I always believe a market correction, there's a high probability of a market correction. That's my belief, and that's the reason why I've been calling for the US S&P short and stuff like that, right? And the US, the Fed, right, they're, like I said in my previous meeting report, and they were slow to increase their rates, and they will be also slow to hike their rates. And for them to hike their rates, something has to crack in the economy. That's the reason why, as long as they don't do anything, they will just keep quiet and wait until things are really bad, then they will start do something. That's the reason why I think the S&P 500 will continue to drop. Just look at the price section. I think that will tell you a lot. Okay, when we come to charts, you will see.